Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Sunayna Tuteja. She's the Head of Digital Assets and Blockchain at TD Ameritrade, and we're going to talk about the impact of Bitcoin halving and discuss which signals to look for. Sunayna, it's great to have you back on Trade Talks. Thanks so much for making the time. And a lot going on in the world of Bitcoin over the next couple of weeks now that we finally have hit May. Tell us about what's happening with Bitcoin halving.
Absolutely. Thanks, Jill. Always wonderful to connect with you and your viewers.
Thank you.
Indeed, there is a special event on the horizon that your viewers might have heard about. It's called Bitcoin halving, or some call it halvening. It's like GIF versus GIF debate of crypto, but we'll stick with halving for this conversation. To frame it up in terms of what it is and why it matters, I would outline, 3 points. One, it's a quadrennial event. It is programmed into the ethos, into the DNA code of Bitcoin. This is the third one, the last 2 being in 2012 and 2016. The second point, essentially what this process entails is wherein the block rewards that are paid out to the Bitcoin miners is cut in half. So today the miners get paid 12.5, and which is going to get cut into 6.25, thereby slowing kind of the pace of supply of Bitcoin. In a lot of ways, I would say Bitcoin is very analogous to gold. One, there's fixed supply, as you know, capped at 21 million. And just like gold, there's a very slow release into circulation, and it's dependent on an intensive process called mining. Just like with gold, miners have to kind of dig it out of the ground, and then, all the process it has to go through before it hits, mass circulation. With Bitcoin, the miners undertake a computationally intensive process that brings new Bitcoin into circulation, for which they're rewarded. So this halving is really cutting that, block reward into half. The last point I would make is, while halving itself is a very technical event, it is immensely impactful, and there's a heightened interest around it because of its impact to the asset class, right? And that impact can be defined in several dimensions, including, the impact on price or miner economics, or what it means in terms of new market participants. So I think for those 3 reasons, it's very important to the obviously Bitcoin ethos, but also generally from an investment perspective, it's an event that people are keeping an eye on.
What's the historical impact of Bitcoin halving?
Yeah, I think, price is something that you hear kind of garnering a lot of play, and there's precedence for it, because in the last 2 halvings, it did coincide with a Bitcoin bull run leading up to the halving, and then Bitcoin also hit all-time highs post the last 2 halvings. We all remember kind of what happened in terms of the surge up in 2017 after the 2016 halving. So there's a lot of arguments today in terms of will we see similar impacts, and there's really 2 arguments. One, you hear the efficient market hypothesis argument, which states, no, it's already been priced in, right? And, I would kind of push back and say, I don't know that the Bitcoin markets are fully efficient for that to kind of stand up. But then the other argument is the supply side argument, which is no, the price has a lot more room to go, because essentially you're, diminishing the supply while keeping the demand where it is, if not, increasing demand. So, that's why the price movement that we saw the last couple halvings kind of gets projected into this one. What I would say is there's some key differences this time around than the halving that we saw in 2012 or 2016. Number one, the macro environment is immensely different, right? The entire world is grappling with this exogenous event, and there's so much dislocation around all asset classes. So we can't, kind of expect that the same thing we saw last time to happen again. The second piece is the market participants this time are much different. In 2012, 2016, a lot of the folks that were invested in Bitcoin and holding Bitcoin were kind of the early buyers, and maybe they came in for the technical side of it or the ideology side of it, versus today, that market participant group is much more expanded into more Main Street investors and also institutions. And then the third difference I see between this halving and the last couple is just the market structure has very much evolved, and there's a diversity of products. Believe it or not, in 2016, the last halving, the only way for someone to kind of express their sentiment and, around Bitcoin was spot trading, right? There was no derivatives market, right? Today, that's completely shifted. We see more volume on the derivatives market, and consumers have more choices to kind of express their price view on either side of their belief. So I think for those three reasons, the macro environment, the market participants, and just the evolution of the market structure and diversity of products, it's not easy to say that past performance will guarantee, future prediction. So it'll be interesting to see kind of what happens in terms of price and some of the other things.
Yeah, you make excellent points there. That this is a very different marketplace, a very different economy, very different mindset than even just a few years ago. And to wrap up here, Sunayna, why does this halving matter at the end of the day?
Yeah, so I think putting aside price, we are watching very closely what this means for miner economics, right? Obviously, if you're a miner and your block rewards are getting cut in half, what does that mean in terms of will we see more consolidation? What will we see more diversification and efficiency in the mining process? But the thing that we keep a very close eye on, why we find this event to be critical from a retail perspective, and the clients we serve, whether it's a retail investor or the RIA community, and the signals we're watching, like Google search trends, social sentiment. And the third one, which is also very important, is we're seeing a rise in unique addresses of folks holding less than 1 Bitcoin or less than 1.1 Bitcoin, which suggests that this could be, an important catalyst that kind of expands education and awareness and engagement from mainstream consumers, and kind of creating more of that big tent effect where new participants are coming into the marketplace, and there's more of that mainstream investor adoption. So I think that's why this event for us is important, because of the heightened awareness and the appetite for education and engagement.
All right, Sunayna, great to catch up with you as always. Thank you so much for joining me on Trade Talks.
Thank you, Jill.
All right, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.